He made his first angel investment as a teenager, and his name is synonymous with the field. David S. Rose is a serial entrepreneur and an angel investor. He and I sat down earlier. We spoke about the Jobs Act, about crowdfunding. We also spoke about the platform he founded, Gust, and its growth between 2004 and now.
There is a gray area, and this is a question of nuance, and people who are really smart do nuance, which is not always the easiest thing. And there has to be a tendency on the East Coast to focus on the numbers. How are you going to make money? Show me the money. Whereas on the West Coast, it tends to be all about visions and dreams, and if you build it, they will come, and the home run, 1 in a million. And in the real world, it lies somewhere in the middle. You want to have a vision. If you are only focusing on today's revenue, today's dollars, you're not going to get the big Facebook, the big gazillion-dollar play. On the other hand, if you buy into every big vision you see without looking at where the first and second and third steps are, it's probably not going to work.
Speaking of nuance, your role at Gust, your role in the community is to be a kind of mentor. What kind of advice are you giving these days? And I imagine it goes situation to situation, but something that you've consulted on or advised on recently that was news to the receiver?
Amazingly, and it shouldn't be the case, but amazingly, the number one thing is integrity. That was part of the essence of my remarks at TEDx Wall Street.
How do you teach integrity?
What you make it clear is that integrity is not an ad. It's not a bolt-on thing. It's not a little label you wear. It's not something you see in church or synagogue. It is core to business. And if you don't have integrity, nothing else matters. And we as investors, the very first thing we look for when I teach investors, we look for that in entrepreneurs. When I teach entrepreneurs, I make it clear that's the first thing investors look for.
And the focus would be on the products and making sure that the product says what it is, or the service says what it is, and going right through customer service.
It's everything. It's holistic. It's how you as a person, as an entrepreneur, behave. It's what your product does. It's what the business model is for your company. Integrity has to flow through the entire system from beginning to end.
What is different now in this new generation, we can call it, of angel investing these days, even compared to when you started with Gust in 2004?
These days, angel investing, as you pointed out, is much closer to the mainstream. Back 10 years ago, what the heck is an angel? Nowadays, everybody has heard of it. You have things like Shark Tank on television, so everybody wants to be an angel. And that's good and not so good in some respects. Fools rush in where angels fear to tread, may be one way of putting it. You have a little double entendre there.
What about the idea, and we've talked about this before, do you think there's a bubble?
There's a very slight little, what I call a bubbleette. And so if valuations for companies now, which should raise money at a valuation of, say, $2 million, they may be raising it because of this bubbleette at a $4 million valuation. So is it twice as high as it should be? Maybe. On the other hand, is it the $100 million valuation you saw during the dot-com boom? Not even close. So I wouldn't worry too much about this.
More now from my exclusive conversation with one of the very first angel investors, David S. Rose. Among other projects, he founded Gust. It's an online platform that helps connect entrepreneurs and investors. We spoke earlier about the Jobs Act that's President Obama is going to be signing in tomorrow, what it means for angels and what it means for investors.
Well, we certainly hope so, although as an entrepreneur, first and foremost, I have very, very big visions. And so therefore, the vision has always been a very, very large thing. And I would say that it's now playing out the way we had expected it to several years ago. Because the economic forces are pushing everything in this direction, and they have been for years. You're talking about exponential changes in technology, which means it is exponentially cheaper to start a company. And that means you don't require enormous public market funding or rich people.
Now, one of the things that is more inclusive is this Jobs Act. President Obama going to sign it tomorrow. What does this mean? I know you were very involved in the Jobs Act process. Are you happy with the legislation that the president's going to sign?
On balance, yes. This is a very good thing for America. It's a good thing for entrepreneurs. It's a good thing for making the markets function more effectively. There are several parts to it, things that affect how you go public, how companies can stay private longer without being forced to go public because of the number of shareholders, how it's easier for private companies to go public in a slower on-ramp fashion. So those are all great. In terms of private companies, it's now easier for private companies to tell accredited investors what they're doing, the general solicitation rules. That's really good. And then there's the crowdfunding piece, which has gotten a lot of the publicity.
Some people say it's like sausage, and not necessarily in a good way.
Well, there were a lot of challenges here in trying to come up with some set of regulations that would protect people on the one hand and yet allow cash to flow into entrepreneurial ventures on the other hand. And the result wasn't necessarily perfect, but it's going to be interesting to see how it plays out.
What does the crowdfunding aspect, though, mean for the average entrepreneur on the street, a non-accredited investor? And just to remind people, somebody with less than $1 million of investable assets, what if just the average person wants to kick in $5,000 or $10,000 into an investment?
Well, this is a two-sided question. So the answer is it's very good for entrepreneurs. Whether it's very good for the investors, and I put that in quotes, is another story. The bottom line is that the reason there have been all these regulations about accredited investors, limiting them to the private company investments to accredited investors, is because, in theory, accredited investors were sensitive to the risks, could lose all the money they invested, had
Some
leverage.
people say this takes away too many protections.
Well, it's not a question of protection against fraud. That's, I think, a false issue. I don't see there being a lot of fraud here. However, early stage investing is inherently risky. Very, very, very risky. And accredited investors are aware of this. And when you're talking about angel investors, professional angels, they're prepared to lose their whole investment.
I was just going to say, because most angel investors assume or at least accept a third of the investments will pay.
At best.
Okay.
I mean, you're talking 1 in 10. If you're looking to get 1 in 10 of your investments as a home run, and you assume that half are going to go bankrupt and wipe out totally, that's about the metrics for angel investing.
And angel investors who have a lot of experience know this. They are used to this, and they understand let the buyer beware. But somebody who is new to this field and just stepping in may not be as aware.
That's the challenge. If somebody invests in one company and they crowdfund one company, the crowdfunding that exists to date, the creative project crowdfunding, is wonderful because it lets people fund these things that couldn't otherwise get the cash to do it. But there's no expectation of economic return. So that's wonderful. But now if you say, OK, you can crowdfund it, but you are expecting to make money at this, in the real world, most people who invest and put money in these equity crowdfunding projects are probably not going to see a return.
David, it's called the Jobs Act. We saw a rare instance of cooperation from both sides of the aisle, Republicans and Democrats. Everyone wants to think this can create jobs. Do you, as an entrepreneur, believe that it can create jobs?
Yes, absolutely. I mean, if you look at the statistics, the large majority of jobs that are created by these new companies. And we are in a time of extraordinary ferment where entrepreneurs are using the latest in technology and new business models to create new companies and therefore new jobs. So that's very good. Will
these jobs that are created be around 2 years later?
That's a really interesting question because the majority of these startup companies, of any kind of startup companies, don't succeed. The ones that do succeed, however, become the Apples and Googles and Facebooks and so on and so forth, and those are long-term jobs. Some of the nitty-gritty things that we just talked about in passing, the idea that you can have up to 2,000 investors, right, before you feel the pressure to go public as a company. This is part of the new legislation. The old benchmark had been 500. The idea that it's just easier to solicit. In other words, companies, entrepreneurs can go out and approach the everyday person. You don't have to be an accredited investor. You can advertise to anyone. You can ask anyone for money. It's clear. Yes, but they're two very different things. So one, the general solicitation thing said you could only raise money from accredited investors, the big amounts of money, not the crowdfunding, maximum of $5,000 or $10,000, but the big money from accredited investors. The rules, however, said you couldn't tell anybody about it. So the rules still say you can only take that money from accredited investors. But now, by relaxing the rules about who you can tell, it makes it a lot more rational and a lot easier. How big of a watershed moment is this? As somebody who's been in the field for a long time, is this huge, huge, huge? The answer is it's hard to say. I don't think the crowdfunding piece per se is anywhere near as huge as some people seem to think it is. I think the general solicitation piece, however, relaxing those rules is going to be quite a big change. Now, what is your take on Regulation A? Some people call it baby IPO. What does this mean for companies, let's say, once they are past the seed funding stage? It means it makes it easier for them to access the public markets, and that's good. I mean, until now, we've had a very bifurcated world where you have the very few public companies, and then you have the other, 20 million or whatever it is, private companies. This will make it easier, make it more of a spectrum and less of a Manichaean cut.
That was David S. Rose, the founder and CEO of Gust, serial entrepreneur, angel investor.